Thanks for joining us for the Purdue University-CME Group Ag Economy Barometer survey results from December 2025. I'm James Mintert, Professor Emeritus in the Department of Ag Economics here at Purdue University, and I'm going to share with you the highlights of this month's survey. The Ag Economy Barometer index fell 3 points to 136. That's about the same as this time last year. It leaves the index at year-end 22 points lower than it was in May, which was the index's high point for 2025. The current condition index reading of 128 was unchanged from a month earlier. That left the current condition index at year-end 18 points below its peak of May 2025, while the future expectation index fell 4 points to a reading of 140. That left that index down 24 points from its peak, which was also in the month of May. The Farm Financial Performance Index rose 2 points in December to 94. That index is up 16 points since October, but that still leaves the index 15 points lower than it was back in May. Farm Capital Investment Index rose 2 points to 58, and although the index rose slightly this month, we still had 60% of the respondents say it's a bad time to make large investments in their farm operation. The short-term farmland index at 117 was 1 point higher than it was a month earlier, and that's the third month in a row that the index rose. It's now up 11 points since September. The long-term farmland expectation index set a new record at a reading of 166, up 1 point compared to last month, up 5 points compared to 2 months ago, and up 20 points compared to late summer, early fall, when the reading fell as low as 146. We've been asking producers about their perspectives on ag exports over the upcoming 5 years since the beginning of 2019. This month, the percentage of producers who say they expect to see exports decline over the next 5 years fell to just 5%. That's 2% less than last month and compares to 14% just a couple of months ago. So producers are relatively optimistic when we ask them about a generic question relative to all ag exports. But when we followed up and asked more specifically about soybeans, we got a different response. 13% of producers in the survey said that they think soybean exports could actually decline over the next 5 years. And when we asked them about the competitiveness of U.S. soybean exports with respect to Brazil's, 84% of the producers in the survey said they were concerned, and 45% of them said they were very concerned. When we asked producers this month about their expectations with respect to the impact of tariffs on the ag economy, 54% of the producers in the survey said they think it will strengthen the ag economy. That's down substantially from last spring when 70% of the respondents in the survey said they thought it would strengthen the ag economy. And perhaps more importantly, 19% of the survey respondents this month said they were uncertain about the impact of tariffs on the ag economy. That compares to 8% who felt that way last spring. And finally, when we ask producers about their perspectives on whether or not the U.S. is generally on the wrong track or headed in the right direction, 3/4 of the respondents in this month's survey said that the U.S. is headed in the right direction, and just 25% said on the wrong track. That compares to 67% who said right direction a month ago and 33% who said wrong track back in November. That wraps up the highlights for this month's survey. You can get the full report on our website, purdue.edu/agbarometer, and you can also get more details on our podcast, Purdue Commercial AgCast, which is available on all the major podcast providers and at our website, purdue.edu/commercialag. On behalf of the Center for Commercial Agriculture, I'm James Mintert. Thanks for joining us.